All right. So back to you real quick. This is on implied volatility. It's just a class at this point. So if you're new to options, or even if you've been an options trader, everyone knows that the factors impacting the prices of these options are pretty much these 5 items: the current stock price, the exercise price, or the strike price, as they call it, the expiration date, otherwise known to days till expiration. There are factors of interest rate and dividends that come into play. And then what this area is, this training session today will be about is the volatility, or also known as risk. As I denote there, implied volatility, you'll see me use the term IV around that, is relative for each and every stock. What might seem high might be fairly low for that particular stock. You can't really look at an IV from stock to stock. You have to look at it from its own year, back a year, or however far you want to go back. It's all relative to that particular stock. You can look at other stocks and try to see which IV scenario makes the most sense, but all in all, IV is related to a given stock and the option chain that is related to that. Any questions? Okay.
No, all makes sense.
Okay. So have you seen the stocks Predator yet?
No, not very brief snippets of it, but nothing in depth.
Okay. So I want to kind of take today's session and use the xBrat Stocks Predator. This is today's results. You pretty much run it once, when you get up in the morning or whatever, and then you'll get this confluence meter that will show you the scanning of the thousands of stocks that are out there. These ones are being picked up, and they break them down based on the xBrat algorithm, or xBrat algo, the unusual activity of the option chains, and then IA is like insider activity that is going on. What predominantly you want to do, if they were all one color, like all green or all red, then you'd either be going with calls or puts and so forth. In this particular case, we don't really have any scenario like that. The closest we have, and what I'll be talking about today, is the Citibank out there, which has both unusual activity on the option chain as well as a green light on the xBrat algo. So I'll take a look at that. I'm not going to look at any of the other ones, but for this 30-minute session here, I will look on here as the slides move forward. If I move down, and if I were to double click, this is just a slide. If I were to double click on the indicator in the actual program, the Stocks Predator program, it would bring up this first box that you see down here, and you can see the symbol C's in there, and it gives you the 3 times recently that they've, in the last 30 days, that they've come across unusual activity. So the first one was on October 25th. Another one was for
Matt or Billen. Can we get more promo codes? Because we're running out, please.
Yeah, I lost them all.
I'm sorry, was there a question?
No, just listening.
Oh, I thought I heard someone talk about promo codes or something. Okay, so there's 3 different occurrences in the last 30 days or so where there's unusual activity. So this one has, the one I'm going to be talking about in today's session kind of ties around this December 15th, 2023 expiration date. So at the time, the stock was at 42.04, or at this time it's 42.04. The strike price
expired, right?
I'm sorry, I'm hearing background noise from someone. If you're not asking a question, if you go on mute, that'd be great.
Unless you do it before a news release, you might be doing everybody a favor.
Okay.
Yeah, sorry about that, Rick. I think that was mine.
Oh, okay. I wasn't sure if there was more people on. Anyway, so I'll be looking at the next slides are related to the C, and because this was showing up here, we're going to look at the December 15th expiration date. All right, so moving on. So if I look at, and you can see the C up here, this is the chart. This isn't a Thinkorswim chart. And here's the option trade possibilities that you have here. And I'm going to go through why this is a good bullish IV trade from a debit perspective, but it's a poor bullish IV trade from a credit perspective. And by credit, I mean selling premium, selling certain option strategies for premium, where you take in the premium and then you let the, you hope to buy it back at a lower price and then, profit the difference at that point in time. So even though, and I'm going to go back here, even though it shows up on the stock creditor for this stock price at 12.15, the current stock's already over that price. So the question would be, like, is it still a valid trade? What could we possibly do here in this time frame of 12.15? And that's what takes me into the look here. So what the implied volatility is, we don't, and I'm going to show you samples or examples of both. What we don't want to do is, you don't want to get into a trade where you're buying a long call or even a long put if the IV is extremely high, not just numerically, but from an IV ranking or percentage. And if you can see down here, the IV rank right now for C, it's all the way down here, is 9.68. What does that mean? IV rank or percentile means that only 9.68% of the time is the IV lower than the current price, the current implied volatility at this point in time. That means that there's a good chance that the IV moving forward into December is going to rise, which means that would be a good bullish trade of a debit style trade. And today I'll only talk about buying calls, going long or buying calls. There are other strategies that we'll talk about in other training sessions, but today we'll just use this as in the simplistic sense of just buying a long call at this point. So any questions on there first? Okay.
No, everything is making sense to me.
Okay, great, thank you. Now, this is a foot locker symbol that I want to use as a counter example of if this is, which you wouldn't want to go long on an option, even if the stock predator or any sort of other tool that you might be using looks like it could be moving forward and you want to purchase options, that you have to take implied volatility into consideration. If you're just buying stocks or a commodity future or something like that, you can go ahead and buy that. But if you're going to play in the options arena, you have to understand implied volatility. So in this particular case, you can see it up here. I say this is a poor bullish IV trade if you want to, do a debit type of situation where you're going to be buying a call or buying a put, depending which direction you want to go. But it is a good one if you want to be looking at a credit spread, which, like I said, we'll talk about in future classes. The reason this is a poor bullish trade is that you can see that the IV rank is at 100%, which means that basically 100%, it's maxed out. Basically, all the other IV values, implied volatility values, are all below this level, which it could still go slightly higher, but not high enough to be, to be worth the risk that you'd be taking. So you don't want to be taking any sort of long position, even if like I said, even if the indicator that you're looking at, whether it's a stock predator or any other indicator, even if it looks like it could push forward in the stock, The option itself may not move forward based on how high it is right now with the ranking. So you want to, if you're going to go long on an option, you want the IB ranking to be down relatively low. And if you see something like this, where at the very top, then you want to avoid any sort of options. Like I said, could still be profitable, but probably not the risk reward situation will not really probably play out for you in that particular case. Any questions? Okay.
Yep. No, everything's good.
Now, the other thing that's of interest here is you can see also, you also want to kind of keep track of if you can map where the earnings are, you know, on your whether you're using Thinkorswim or any other platform. If you can track the earnings, that's a good thing to be looking at, because you can see that as they approach their earnings marks, and here it is right here, the IV continues to move up, which means the price of the option is going to move up. So if you bought back here, your option is making money. And then when you get to earnings, you really want to be out of the game by, you know, at this point in time, because this is what's called the implied volatility crush, right at earnings, because there's no more suspense, there's no more volatility or risk. Everybody knows what the earnings data was, and now the implied volatility will like crush right down. So you want to be out of whatever trade you're in before earnings. Take what you can get at that point in time. If you go beyond that on a debit trade, like a long call, you will quickly lose all the profit you've made. So you want to make sure to keep track of the earnings dates around the times when you're doing these type of calls. I'm just gonna bring up a little note here that also, like, let me go back to here. So you can see I'm also tracking historical volatility, which basically shows like a year of what things were a year ago at this particular date. And I track that on another grid in here when I want to double check things. You can see right now that in the C on Citicorp that we are going to look at buying, it is below that, and which brings me up to the statement. If the IV is greater than the historical volatility, the options may be overvalued. And if the IV is less than the historical value, the options may be undervalued. And that's what you're looking for. You're looking at historical volatility. And like in this case, it is underneath. So it is undervalued. It's also got it checks the box for implied volatility ranking or percentage. So both of these situations bode well, along with what we saw on the stock predator, that this would be a good long call trade possibility. And as I denote here, as the underlying stock becomes more volatile, implied volatility can be expected to rise. As the underlying stock becomes less volatile, implied volatility can expect to fall. And that takes you back around like earnings, where earnings is unknown. Nobody knows exactly what's going on, or it could be around some sort of event that's going to be out there. That's where you want to be tracking the IV to give yourself an idea. This one down here could go lower. It could go lower even, but at this moment in time, if you want to make a decision, the box or check, it's below historical volatility. It's very low on the IVR, or the ranking percentile. It's low on there. And then also it reflected up on the stock predator list. So I would make a trade, and what I would do on this particular trade is, and I'm going to switch over to, well, any questions first before I switch over? Okay. So what I would do, bear with me for a second. Okay, now I'm on my actual Thinkorswim account. If I'm going to look, I'm going to bring up C here, and you can see it's very low IVR, historical volatility is low, and we know that the stock seems to be moving upwards. What I would do at this point in time is we're looking at the December 15th. So when you go in there, when you look at an option trade, when you go to trade, you're going to go down to the option chain. We're looking at December 15th, and we believe it's going to rise. So we're going to look at the calls. Oops, wrong symbol. December 15th, we're going to be looking at the calls because we believe it's going to rise. Now, what grabs me here is we've already passed the strike price that the stock predator went to. So then if you want to keep going into December, at this point in time, what I like is if you look at the strike price of 47, 47 is showing a lot of open interest. 25, almost 26,000 is the open interest value at this point in time. That's a large number, and you can see there's also a large number of volume compared to the other strike prices, with the exception of 50 at this point. So the other thing I usually look at is the gap in the bid-ask price. It's very tiny here. That's less than, that's like about 2% or less at this point in time. You want to keep it under 10%. So this is the one that I would probably pick, the 47 strike. You know, basically, I'm not going to get into order entry right now, but I would just be buying whatever number of options for this, let it fill, and then just keep an eye on it. I do want to state that one other thing that I would do personally prior to putting this trade on is I want to look at the daily and weekly support and resistance zones. So I'm going to flip back over to the slide here, and this is the this is the daily stock of C, the stock we're looking at, and with both the daily and the weekly support and resistance zones. Now, GTS has a product called Guardian Zones, which I use, and that automatically will draw in and dynamically change as time moves forward the support and resistance zones on your chart. Strongly recommend it. You could, however, manually draw in your support and resistance zones as well, but Guardian Zones makes it very quick, very simple. There's no setup time, just turn on the indicator and let it run. So I was ready to pull the trigger on that trade. As you can see, we have a lot of free air, a lot of space between where we are now all the way up into the 50 area. So our strike price of 47 is way down here. So at this point in time, we don't have anything that would potentially impede this. So we've checked all the boxes. We see the IV looks great. We see that the IV looks great compared to historical volatility. We know that the gap in the bid-ask price looks good. The open interest and volume on the option chain for that strike price looks good. And the support and resistance, we've confirmed at this point in time that it looks good. Given all those check boxes, I don't see any reason not to make this trade at this point in time. And there's no definite absolute here that it would hit 47 or increase in value, but everything is looking good. So I would put that trade on you know, go from there. I want to just show you a time when if this was the current trade right now, and you can see a zone, a resistance zone here and a support zone down here. I would, if this was that stock we were looking at, just as a counter example, then I would not be taking this trade. It's trapped in between right now. It's possible that it could push through, but in this particular case, I wouldn't have taken it if that's what it looked like. However, the stock we're looking at from the stock predator looks like this. So like I said, everything looks good. I would execute this trade and see how it goes. So I will go back to my board here, and this is where, like I said, I'll show you trade entries, order entries in another training session down the line. But this is the stock strike price. This stock here, Citigroup, 47 strike price. I'd be buying it at 0.53 at this point in time, and then we have about a month at this point until expiration. So we have about 30 days to see how things move. You can put in your own risk management parameters as you move forward. Is there any questions? Have I missed anything that you're interested in?
Everything looks good. Maybe for a later time, you could do like a stocks predator run through to kind of go through it and let us know and see what else it entails and offers. So maybe anyone who's interested in it will want to jump in and purchase, you know?
Sure. Yeah, that makes sense. Yeah, I think what I'm going to do is my plan is to go through. I have the stock option channel. There's also the stock predator channel and the automatic strategy builder channel. This particular channel I'm trying to put out there for people who want to learn about stock options and add that to their repertoire of trading. They can probably get the same education elsewhere, but I figured I'd just tie it in as best as possible, like to the guardian zones or the stock predator. But moving forward, I will have like an actual session that's built around the use of the stocks predator and go from there. It hasn't been, I don't believe it's releasing until December at this point, outside of the beta users. So I hope to have some additional stuff for people closer to GA launch that can then use the link to go and purchase or ask further questions. All right.
Perfect.
So
I'm going to have to take off here, Vic, but great session, and I'll catch you later. Thank you.
Okay. Thanks, Lou. Take care. Bye-bye.